Jamie Dimon, the so-called king of Wall Street, forced to admit that he's got a lot of egg on his face today. We're going to break down what you need to know. And next, is same-sex marriage a winning campaign issue? Now, if you would have told me just last week that Obama would endorse same-sex marriage and then actually campaign on it, I would have thought you were nuts. But hey, as they say, you never know. And later, is Romney a bully? Well, with new revelations coming out about a so-called high school hijinks, some are asking, do you really want a bully sitting in the White House? That and a lot more. It's all coming up in this edition of Richard French Live. We are in first position, though, with the latest on J.P. Morgan's risky business.
The best of times turned out to be the worst of times for J.P. Morgan.
A shocking disclosure from J.P. Morgan last night, a trading loss of at least $2 billion.
$2 billion.
$2 billion.
2, 3, 4, 5 billion.
But $2 billion is a rounding error over at J.P. Morgan, for God's sake.
It's very much like Star Wars.
Couldn't have come at a worse time for CEO Jamie Dimon. He has been one of the biggest critics of the Volcker Rule.
All this talk about Dodd-Frank and the Volcker Rule, seriously.
Clearly nothing related to the Volcker Rule.
Clearly inconsistent with what we did in the so-called Dodd-Frank bill or the Volcker Rule.
This trading may not violate the Volcker Rule, but it violates the Dimon principle.
The Dimon principle. If I fess up that I'm stupid, then it's A-OK.
Jamie Dimon, I'm not saying he's got no clothes. I'm saying all the bankers have no clothes.
Jamie Dimon is still the gentleman to be running that firm.
The case for pushing back or watering down financial reform will be a lot harder to make now, and that, as I'm told, among the J.P. Morgan's competitors, not very pleased about that.
Congressman Barney Frank, he is out slamming what else? J.P. Morgan Chase. He finds it interesting that in one transaction, they have been able to lose about 5 times the amount that they complained about this costing them, i.e. regulation.
Touché by Barney Frank.
You can't be perfect every day.
Well, that's putting it politely. As you can see here, J.P. Morgan's lost more than $2 billion, and it could be a much bigger number than that. Huge news in the business world today, and joining us on set to sound off on that story and much more, we're going to bring in Dominic Carter, of course, here, our good friend, Andrew Whitman, senior political correspondent, and Kaihan Krippendorff, a business strategist and former consultant with McKinsey & Company, and author of several business strategy books, including the latest, Outthinking the Competition. Okay. Andrew, bring me up to speed on this thing, because it sounds pretty familiar, this story, after all the promises that I'd never hear it again.
Well, let's keep it really simple, Rich, with one big number. The Wall Street giant says it lost more than $2 billion on a complex trading strategy gone wrong, and that is now refueling the debate over regulating risky trades.
J.P. Morgan Chase is the nation's biggest bank. Its CEO, Jamie Dimon, dubbed the King of Wall Street. But in an emergency conference call Thursday, Dimon admitted losing more than $2 billion in an embarrassing blunder.
Obviously, it puts egg on our face, and we deserve any criticism we get, so feel free to give it to us.
That criticism is coming fast and furious. Lawmakers like Michigan Senator Carl Levin called the loss, quote, a stark reminder of the need for regulators to establish tough, effective standards. Dimon's reputation soared as he steered his firm through the financial crisis. He's been a vocal opponent of new bank rules, saying lawmakers don't understand his business. Analysts say this debacle turns the tables.
Right now, Washington is going to say, Jamie Dimon, you seem to be the one conflicted. You seem to be the one confused, making grave mistakes like this.
On that conference call, even Dimon acknowledged this doesn't help his argument.
It is very unfortunate. It plays right into the hands of a bunch of pundits out there, but that's life.
It also plays into widely held fears that even a supposedly well-run bank like J.P. Morgan Chase is getting too big, gambling with the entire American economy all over again.
The exact kind of market that got firms like AIG, Bear Stearns, Lehman Brothers in major trouble in 2008. Are you putting us right back in that place?
And the crisis may be far from over for J.P. Morgan Chase. There could be another $1 billion or more in losses to be reported soon, Rich.
All right. You know, one of the things that grabbed me, Kaihan, was that Jamie Dimon said, we're going to fix it and move on. And to me, there's a tone deafness still going on, as if 2008 was just a bad nightmare here, and that you got to leave Wall Street alone, regulation, onerous. I mean, Jamie Dimon was, leading the charge here that Washington didn't know anything about Wall Street. Just leave it to the big boys and stay out of the way. What's good for the economy is what's good for the big banks. To me, they make it sound like $2 billion is a rounding error, and maybe it is for them, but I think that speaks to the point that you still got too big to fail and still not enough people, that are actually having the supposed transparency that we never got.
Right, that's exactly right. I think there's two ways to look at it. One is, how is this going to affect JP Morgan? They're still going to have $4 billion in profit this quarter. For them, they're going to move the discussion to we can absorb this loss. But it doesn't. They're trying to overlook the key question, which is, did they do this on purpose? Did they do this by accident? And either way, does that mean that we need more regulation? And I think that what that means is that regardless of which way you look at it, we need more regulation.
For me, a couple weeks ago, there were rumors that this London trader who had names like Voldemort from Harry Potter fame and the London Whale or whatever, that he was making huge risky trades out there. And when asked about it, Diamond said, "Oh, this is a tempest in a teapot." If he knew 2 weeks ago that you could have had this kind of volatility, again, with credit default swaps, and he's the only one saying don't worry about it, I thought that was supposed to be a thing of the past after Dodd-Frank, and I thought Volcker, I thought all these things that these guys complain so much about, we at least were going to know before the problem, hit us in the lap.
Yeah.
But once again, it happens, and then I hear him say, don't worry about it, trust me, we're going to fix it and move on. It sounds like a broken record.
Yeah, it does. I think what is unique about this situation is that whereas before they were sitting on assets that were actually worth less than the book said they were, in this case, it seems that the value of the assets that this guy had placed was still officially on the market. They were worth what Jamie Dimon thought they were worth. The issue is that let's say you are a real estate investor and you buy an entire neighborhood. Those houses are worth what they're worth. But if you decide one day over 1 month that you want to exit, you're going to drive down the value of those houses, and they were so concentrated on so many stocks that
and Andrew, I want to pick up on that analogy because one of the things that came out of 2008 was we're not going to be in this situation again, but perversely, the opposite happened. We opened up the federal window to keep these guys alive. We obviously had TARP and we had the bailout. They took money from the window. They didn't lend out with credit, but leaving that aside, they got bigger. And this whole premise of too big to fail and the mega banks here, it's like they got on steroids now. So I want to know, what are you going to do to JP Morgan Chase at this point? Hasn't the horse already left the barn?
I'm not really sure there's anything that's going to happen to them. If it didn't happen in 2008, when everybody was talking about this regulation and it didn't happen, and you were talking about the Volcker rule, that never got instituted. You had the opportunity to really regulate Wall Street in a big way, and it didn't happen because there's a mindset in Wall Street that the market regulates itself. If a company makes mistakes, pretty soon the sharks will circle and it'll put it out of business, which may happen eventually, but how much collateral damage is there in the meantime? And so you have these banks that say, boy, you're eroding our profits if you regulate us, but they're not regulating themselves. The whole principle based on greed, which is a good thing in a lot of ways in the market, but people don't follow the rules, and the hopes of self-regulation don't happen.
You know what's interesting, Richard? You mentioned mindset, and I would agree with you. There's a certain mindset on Wall Street. But how about the mindset of the average Joe or Jane? Ask 10 out of 10 people, and they will tell you it doesn't take a rocket scientist to figure out, which I think is your premise, that there needs to be some regulation. Are we just going to keep repeating history with billions of dollars? Now, yes, there may be private money or whatever, but billions of dollars have lost and nothing is done.
But there's such a strong argument against regulation that common Joes and Janes are buying into, that's if it puts a brake on the success of business, if it slows down the overall success of a business, that's bad for the overall economy.
Let me give you one. We've seen already that it's not just, the people marching with the 99% signs that are saying we got a problem here. If you look at who's getting downgraded here and through the stress test aren't making it, I'm not trying to send a panic out there in the audience, but not all these guys, they might be sitting on some money, but they're not all flush with cash, and they're not all in the solvent position everybody believes they are. There was a thing called the SAFE Act, okay? What the SAFE Act basically said is, no single bank here can hold more than 10% of the nation's deposits. That's not socialism or crazy talk. That's saying, wait a minute, if one of these guys goes down the toilet again, they're not going to bring America's economy with it. And that was labeled as, oh my God, you might as well have a sickle and a hammer here and go back to Mother Russia. it's not a crazy idea, is it?
No, it's not. I don't think it's a crazy idea. And I think that what we're going to see now is there's a greater probability that regulation is going to separate again commercial banks
But
from
is that
from
BS?
business.
I thought after 08, who the heck could have been against it? But somehow, some way, they made that thing so toothless it didn't change anything.
Yes, but the thing is, their main spokesperson, Jamie Dimon, is now lost some credibility, and I think that that means that their stake at the table, really is damaged. So I think maybe not 100%, but I saw one statistic that an analyst in D.C. he thought that there's about a 1 in 3 chance that there's going to be regulation to separate commercial.
I got to go to a break, but I got to ask you guys both this question: do you think the average person on the street really cares? Do you think? I mean, I get mad about this because the arrogance, right? It's not like you're the rocket scientist here and they just say, leave me alone. You screwed up everything in 08, okay? And we're still talking credit default swaps with no regulation. It's amazing to me. But does the average guy care?
Yes and no. The average person, I believe, has a mindset of they're going to do what they're going to do anyway. I'm the small guy. I can't control what they're going to do. They're going to continue to waste billions while I'm struggling with my mortgage payments. I'm struggling to put food on the table. But I think the average citizen says, what can I really do?
Fair enough.
It's complex and confusing, and I think that dissuades people from getting as invested in this as they might otherwise be, pun not intended on invested. And I also think that there's a thought that we're a capitalist country and Wall Street is the epicenter of capitalism. So why would you want to interfere with capitalism?
Kaihan, great job as always, my friend. Thank you very much.